What's going on, everybody? I haven't made one of these in a minute. Uh, I've been trying to get things straight with my business and everything, but I wanted to get back to you with some more advice on stock investing. This video is about basically what I call dividend investing and the importance about it. Basically, dividend investing is finding uh, great valued stocks, great structured stocks as well, and ensuring that they do give great dividends so that the stock, buying a well-rounded stock, that it's stable. Every stock has its ups and downs, but it's well managed and that you will get a great return on your investment. Plus, with the dividend, it's, an added bonus as well. Down here we have five uh, different stocks to choose from. And again, you can go uh, on basically any platform and find an investment screener or a place to compare investments. I found this. I always use Capital One Investing. That's my trading platform. That's where most of my stocks and investing happens. And again, you want to make sure that one, the stock that you're trying to comprise, as far as a dividend investment, you can afford a great deal. I know everybody doesn't have lumps of cash sitting around, or that much of a steady income, but it is going to take either or. You can do monthly installments. You could pick one. Let's go with the cheaper one. You could pick CIG. $200 a month if you can spare, and as long as it stays below $2, buy 100. Just keep buying 100 shares. Keep going, keep going, keep going. Until eventually, you end up with at least 1,000 shares. It may take a while, but in the end, it's worth it. Give it a dividend. The annual dividend is 25 cents. 1,000 shares, that's at least $250, yearly. Now, I know you're thinking that's not much, you gotta keep it up. And it builds, especially with the stock, growing as the year goes on. Companies usually will bump up the dividend. This could go from 25 to 30 and so on and so forth. But this is a patience type of game, especially when you deal with value investing and dividend investing. These are stocks you hold on for years and years as they grow and as they pay back that dividend. Now, with the money you make from dividends, uh, I give two sets of advice. You can either split it, take half as profit, go buy something nice, money towards a vacation or something like that, or take all of it, put it right back into buying more shares so that you can up the dividend and up your shares, your overall shares within this company, and thus gain more back when those dividends come in, um, which is what you want to really do. And again, you want to have more than one, so you can start on one, find another affordable one, and start investing into that one as well and going on from there. There's another thing I wanted to show you. Is called buying on a dip. I'm going to show you that in a minute with Facebook stock. All right, so this is what we investors call buying on a dip. And this is just a quick example here. As you can see, and I tell anybody, every stock, I don't care what company it is, I don't care how popular it is, I don't give a shit. Every stock falls and rises. Some fall more than others, you know, so on and so forth, depending on the industry and the company. The smart thing to do, and what investors have to understand, is you don't freak out. A lot of people will see they lost a couple $100, freak out, sell everything, and I mean, sure, they locked in their profit, which there's nothing wrong with doing that. I encourage you anytime. Well, I'll stick to that with trading, but you know, anytime you can guarantee that profit, you stick with it. But as for long-term investing, especially anything that carries dividends, when it dips, as you can see, where it's towards the end of February, you see a dip and then you see it go up. And you see it dip again at about $100, falling from the 115 mark at the beginning of February. Now, this, you know, when this happens, and it is again a very well structured stock, it will always bounce back and keep going. When that happens, do not sell everything. You know, you could sell some for profit and, you know, keep the bulk of it in and allow it to roll. And again, it's going to, you know, it's going to go back up. But the reason for that is you buy it back at a cheaper price. It's like, as I said in my other videos, a sale. That's all it is. That's how I see it. That's how most investors see it. It's a sale. You bought it at 120. Okay, it dropped to 105. You have extra money. Go out and get those stocks at a cheaper price. You get more bang for your buck. Plus, it adds on to the money you get from dividends. You know, you build it. You never freak out and just sell everything. Every time it dips and you can afford to get more, go out there and get it instead of waiting for it to go up and then buying it at a higher price. So that's something to keep in mind. Anytime you see a sale like that, unless it's a crippling, you know, catastrophe with the company, don't bother with it. But if it's just having a bad day, go ahead while it's on the short end, go ahead and buy it and get those shares at that cheaper price and keep it moving. That's it for this video. I know it's kind of short, it's about 8 minutes. The next video I'm going to do, it's probably going to be a little short. It's going to be on support and resistance and what that means and how to interpret it when buying stocks. That'll probably be coming out. I'll probably do it later on today. It's 2:31 in the morning. I'm up to watch pre-market on some stocks. I plan on buying in the morning. So I'll see you guys on that support and resistance video. And again, don't be scared to lose all your money, because that's what investing is. You can't be scared to lose all your money, because that's always a possibility. Not saying that you will, not saying that you won't, but keep that in mind. It is reality. Peace.